Hello everyone, Chris LaChava with RE/MAX Heritage Professionals. Happy 2024. We're actually a little late in doing our December market update. We're into the new year. These would be for the stats to the end of November. This is for Winter Haven, Florida. Let's get into the numbers. So November 2023 in Winter Haven, we saw 49 closed sales. That is compared to 46 a year ago, an increase of 6.5%. Cash sales as a percentage of closed sales, 32.7% of all sales were cash sales compared to 19.6% a year ago, an increase of 66.8%. I suspect that's because we've had our snowbirds come back into town, and oftentimes those are cash buyers in our 55 and up manufactured home communities. Median sales price, $312,000 compared to $310,000 a year ago, an increase of 0.6%. Average sales price, $297,357. That's compared to $305,882, a decrease of 2.8%. Median percent of original list price, 96.4% is what sellers were receiving of their list price, compared to 99.2% a year ago, and a decrease of 2.8%. Median time to contract, so from listing to going under contract, 42 days compared to 29 days a year ago, an increase of 44.8%, so it's taking almost twice as long to sell a home right now. Median time to sale, 83 days compared to 76 days a year ago, an increase of 9.2%. New pending sales, 70 new pending sales compared to 57 a year ago, an increase of 22.8%. New listings, 104 new listings compared to 74 a year ago, an increase of 40.5%. That's very good news for home buyers, seeing that significant increase in new listings, and good for the housing market overall. Pending inventory, 102 compared to 95 a year ago, an increase of 7.4%. Active inventory, 335 active homes in Winter Haven compared to 245 a year ago, an increase of 36.7%. And then month supply of inventory, 4.5 months of inventory compared to 2.8 months a year ago, an increase of 60.7%, and probably the highest month supply of inventory I've seen in the last 5 years. So we are approaching a balanced market. We are still in a seller's market, but almost in a balanced market at this point. Tune in as we talk a little bit more about how the year shaped up in 2023 and what we can expect in 2024. So overall, 2023 was a much slower year compared to the previous couple of years. This was largely due to mortgage rates that at one point topped out at over 8%. As really December, end of November and December came around, what we started to see was interest rates coming down, more sellers putting their homes on the market, and kind of the housing market really picking up steam towards the end of the year. And part of that is because mortgage rates dropped pretty quickly from 8 to, last I checked, they were just under 7, which is pretty significant. And I think at an interest rate that more buyers were comfortable with, in the 6s, they were not comfortable with 7s and 8s. And so that brought more buyers to the market, and more sellers, anticipating buyers being in the market, deciding to list their homes. So what does that mean for 2024? Well, the Federal Reserve has already announced they expect 3 rate decreases in 2024, at least in the first part of 2024. While that doesn't always signify a decrease in mortgage rates, it often does. And so I would expect to see mortgage rates continue to go down, maybe even into the low 6s. If we're really lucky, maybe into the upper 5s. Nevertheless, as rates go down, what's going to happen is those buyers who were waiting, didn't want to pay 7 and 8% mortgage rates, they're going to come back to the market. And when they do, while inventory has increased, which is really good news, it is still very, very low for what we need. It's still nowhere near able to meet the demand. And so what's going to happen when those buyers flood the market is that home prices are going to start to skyrocket again. I actually think we could see something not exactly like we saw during the pandemic, but much closer to that as we get into spring and summer, kind of the hot home buying season nationally. Now, obviously here in Florida, we buy and sell homes year round. Weather doesn't really impact us too much, but I do expect to see a flood of buyers in the market into spring and summer. And I would expect to see home prices, not that they were going down, but I would expect to see home price increases being more dramatic than they have been for the last year. And so what that means for you if you're thinking of buying a home is that if you're trying to time the market, and I always advise people, if you're an investor, right, and you're buying properties as investments as opposed to maybe investing in the stock market or mutual funds or things like that. If you're looking at purchasing homes as an investment because you're going to hold them, you're going to fix and flip them, you're going to rent them out, whatever, it makes sense to try to time the market to try to maximize your investment. If you are looking to buy a home to live in, this is going to be your primary residence, you're going to kill yourself trying to time the market. But if you wanted to try to time the market, now would be the time to buy. Don't wait until the interest rates drop to low 6s or even 5s, because then you're going to have competition for those houses that are out there. And so we're going to go back to bidding wars, we're going to go back to waiving all contingencies, and that's not a good market for home buyers. It's not a good market at all if you're a home buyer. So what I recommend you do is look to buy now. Rates are pretty good, and prices are not going up astronomically. So it's a good time to try to get that house probably for the lowest price you're going to see in the next year or two. Like I said, if you wait, that price is going to be up, and what you can't do is you can't refinance the price. The price you pay for the home is the price you pay for the home, and that's that. You can refinance your interest rate. So if you buy here at 6.5% and 2 years from now it's down to 5.5%, it absolutely makes sense to go ahead and refinance, but at least you're refinancing a smaller amount of money than if you wait and you pay more for the home. You're not going to be able to change what you purchased the home for. So that is one thing. If you're looking to buy, do it now. Don't wait until mortgage rates drop in even further. The second thing is to continue to look at new home construction. I'm starting to put new home communities up on my YouTube channel here. These are new home communities that are going to be building in for quite a while. If you have questions about any of them, reach out to me, but the builders are offering lots of incentives. They're still buying the rate down, so if you really got to have that 5.5% or 5.99% or whatever, most of the builders are buying down that rate for you for all 30 years. Many of them are offering closing cost assistance, if not all of your closing costs, and some of them have even dropped their prices. You're also going to pay lower homeowners insurance, and you're not going to have a lot of maintenance issues to worry about. So really the key takeaways from this video, other than the stats, is to buy now, whether it's resale or to look at new construction to really get the best deals that are available at this time. I would love to help you. Please reach out to me at 863-280-2201. Email, text, visit my website, whatever. All that information is here in the video. If you just want to talk about your situation and figure out what makes sense for you, I'd be happy to talk with you. I don't automatically assume that buying is right for everybody. I have advised clients not to buy. I've advised clients not to sell if it wasn't in their best financial interests. So please reach out. Let's talk. Also, if you have friends or family that are looking to buy or sell here in the Central Florida area, I appreciate your referrals. And as always, I'd love to have you subscribe to my YouTube channel. And if there's topics you'd like me to cover, just let me know. Looking forward to a great 2024. Happy New Year, everyone. And we'll see you in the next video. Have a great day.